welcome to a one-off webinar looking ahead to the US election in a couple of weeks and seeing, depending on who gets in, how markets might react. If you're watching the recorded version of this, it was held live on Tuesday the 25th of October at 7:30 in the evening. I do regular webinars with Aondo. I do a market outlook webinar on a Wednesday lunchtime at 12:30, and I do a social trading webinar normally twice a month on a Tuesday night, looking at how to copy other traders and try and hopefully maximize their profitable trades in your own account. But tonight this is something of a one-off. We've got the US election in a couple of weeks. Clinton is the favorite, but as we saw, as we saw earlier this summer with the referendum, we can get the odd shock. But we're going to just go through what the outcomes would be depending on if Clinton or Trump win the US election. So I've just got the risk warning up there, so hopefully you've had enough time to read that. So for tonight I'll be using Aondo's trading platform, that's Trade Hub, so we'll be looking at the charts. There's a bit of PowerPoint stuff, but we'll spend most of this evening jumping on the charts and having a look at levels in the market. Okay, so first of all, let's deal with stock markets, because I think that's something that plenty of us have an interest in. Historically, when we get a US president voted in, stock markets do well. So over the following 12 months, based on history, stock markets do rise, and the average rise is about 6%. But when we have a situation like we have now, when we have a president who's been in for a couple of terms, it's often not the smoothest performance afterwards. So we can see a fair bit of volatility when it comes to a new president coming in. So let's look at a couple of outcomes, then we'll take a look at the markets and really look at some levels to watch. Clearly at the moment, Hillary Clinton is the favorite to win the US election. So you'd assume that if she does get in, we could see something of a relief rally. We could see maybe some of the nerves and the cautiousness that's plagued markets in recent months, and it could go away. So you'd expect something of a bounce for the major stock indices, well, the US stock indices, and clearly the rest of the world to follow suit. But I think looking past that, when investors start weighing up maybe what some of our tax plans could be, they may be concerned that starts to weigh on the US economy. So I don't think it's to use an Americanism, a slam dunk, that you just buy it if Hillary gets in, go away for a year and come back. We could well see sentiment change as she starts to put maybe some of her policies into practice, but you would assume if she does get the nod that we'll see markets rally off the back of that. Now if Mr. Trump gets in, that's clearly I think going to be a shock for investors. I think that would be quite a surprise, and you'd see possibly investors taking a risk-off approach. So we'd probably be expecting stock markets to go the other way in the short term, at least, if Mr. Trump gets in. But let's take a look at the US markets and see where we are now. So this is the chart I'm looking at here. This is a really long-term chart of the S&P 500 index. There are various US stock markets indices we can look at. I think the S&P is always a good barometer. It's made up of 500 shares. The Dow is made up of only 30 shares, even though it's probably the most popular one. So the S&P 500, I think, gives a much broader view of the US market. We've got a really long-term view here. This is going back to 1992, but you can see the lows from the financial crisis. You can see where we've come since then. I think the low was 666, strangely enough, and it was trading up around about 2150 at the moment. So it's only, if we flip this over to maybe a weekly chart, it's only in recent weeks, you can see here going back to the summer, that we saw the S&P 500 make all-time highs, and my background is all about charting and trend following. Clearly the trend in the S&P is still up, but we have seen some nerves in recent weeks. This is something I touch on in the sort of the weekly market outlook webinars we did. We did see something of quite a sharp sell-off into September after the market had spent the summer really going nowhere. Something of a sharp sell-off. And since then, the market struggled really to go anywhere. You'd say from a positive point of view, and I think if we're still trading around these levels come the election, I think there could be some important levels to keep an eye on if we're still sort of a little bit sideways. And we could well be, we could well see markets mark time for the next couple of weeks until this election's out of the way. But clearly, when the S&P sold off after the summer, we saw these lows. These are the lows. We saw quite a vicious move. So lows. Actually, I'm drawing the wrong sort of line there. I should have drawn a different line. But let me pick up on or is it the horizontal? So these lows are going to be important, I think. So I think they're around about 2108 on the S&P. And you can see the market came back down to it just a couple of weeks ago, came back down towards those low 2100s areas. We saw the buyers come back in, but it's really struggling to find any momentum. So you'd assume, from a theoretical point of view, if Mrs. Clinton gets in, stock markets will shake off some of the stupor that they've been going through lately. And I think we'd expect to see the market rally back up. And if these highs get taken out, these highs from the summer, it does suggest that maybe we're seeing the start of a next leg higher. But I think if you're worried about stock markets falling, the level to watch, the first level to watch anyway for the sort of medium-term trader and investor, are those lows from September around about 2108 on the S&P. On the Dow, if we took a quick look at that, it's around about the 18,000 mark. So I think in the out of hours, this is the Dow we're looking at now. In the out of hours market, the Dow touched, I think 17,920 was the level. But during normal trading hours, whenever we see the Dow weaken back to about 18,000, we're seeing buyers coming back in. But on the upside, it's struggling to make much headway past 18,450. So maybe, the trend for the next couple of weeks is more of this chop. You can see I flipped this over to a shorter term chart, to an hourly chart. That's the last 2 or 3 weeks on the Dow, and you can see it's been a pretty directionless market. We have seen something of an uptrend building over the last week. I put something on Twitter about an hour ago. I think that we've seen we do have a little trend that is chugging away over the last week, and we did get a little bit of weakness today that has gone away so far. That has been our little uptrend over the last week, but broadly speaking, these markets are marking time, so it shouldn't be surprising, maybe too surprising, to see it continue into the election. So stock markets, if Clinton gets in, we'd expect them to rally. If Mr. Trump gets in, we'd expect maybe something of a negative knee-jerk reaction, but at the moment, let's not be surprised if they continue to mark time for the next couple of weeks. So let's take a look at another market. Let me flip it over to the screen. So let's just have a look at the next one and just make sure that's coming up on your screens there. Hopefully you can see that. So now if you look at the US dollar. So traditionally, you'd view the US dollar as something of a barometer for American confidence. And we have seen in recent years quite a lot of US dollar strength. I saw again today, I think the pound nosedived again today down towards the 121 area. But traditionally, a strong US economy, we see a strong US dollar. So once again, I think assuming the favorite gets in, assuming Mrs. Clinton gets in, we'd expect dollar strength. But I think we'll have a look at the charts in a minute. I think we do need to have a little asterisk in there because the dollar has come so far anyway in recent weeks. I think there is maybe a little bit of a question mark, even if there is a Clinton win, about how much dollar strength there could still be to come. But you'd expect confidence amongst investors and also maybe confidence in the Federal Reserve, the US central bank, to raise rates again. And this does seem to be, a question that really dominates FX markets at the moment. It does get quite boring, when you see it all being discussed backwards and forwards, the speculation about when the next interest rate rise will come for the USA, but you'd assume if there's a Clinton win, the Federal Reserve will be maybe a bit more relaxed about raising rates. Now, if Mr. Trump gets in, expectations would be for the US dollar to take a hit. There'd be concerns that maybe the Federal Reserve will be reluctant to raise rates. They want to see how the economy is going to perform under a new president. Plus, of course, I think one of Donald Trump's plans is to revisit existing US trade agreements, and who knows what impact that may or may not have on the US economy. So I think dollar strength, broadly speaking, if Clinton gets in, the risk of dollar weakness if Trump gets in. But let's take a look at the charts, because I think there are some interesting levels coming up, even if we didn't have an election. I think there are some interesting ones to watch. So let's take a look at euro dollar, because I must admit, I've been surprised by the weakness of the euro in recent weeks against the US dollar. But let's just flip this out to maybe a slightly longer term one. If you're not familiar with currencies, of course, currencies is very much a sort of a 2 or 3 dimensional market. If one currency goes up, another currency goes down. So here we're looking at the euro against the dollar. So when we see the market rising, what we're seeing is euro strength, or the flip side of that is the dollar weakening. As we've seen for much of the last few weeks, when we've seen the market slide, what we're seeing is euro weakness and correspondingly US dollar strength. But let's take this out to maybe the last couple of years, because we saw something of quite a sideways market last year. But coming into that, for much of 2014, the story was of a sliding euro. So this is the euro against the dollar, and we saw it go a year ago from being worth $1.40 down to almost being worth just $1, but down to these sort of levels. Then I think the moves we saw last year, you could argue, and I definitely still think it's the case, we saw something of maybe a longer term bottom base building for the euro. So we had it bottom out around about 104.50, that sort of level, with this massive downtrend that was pretty relentless into the early part of last year, sort of February, March last year. Then we saw the market rally, it rallied a good 1,000 points or so, then came back down. And this is one of my sort of favorite little trading setups, where we see a market come back, have a look at a previous low, and then recover. It can give us a relatively low risk buying opportunity. And we did see it bounce back up, but again, on the upside, 116 has really been, it's a long way away from where we are now, but the whole 116 area, 116, 117, has really been a cap for the euro against the dollar. And this is where we are at the moment. So let's flip this over to the dailies. This is the euro that's been declining for the month so far. So we've come from a euro being worth 112 to currently worth around about 109. So we've seen something like a 300-point decline, 3-cent decline so far this month for the euro dollar. So assuming Mrs. Clinton gets in, traditionally you would expect dollar strength, which would mean another push lower for euro dollar. But I'd just be maybe a bit cautious again about just blindly buying the dollar, because we are coming back to what had been, just earlier this year, some really important levels for euro dollar, like when we were seeing in that bigger picture there, the base that was built last year. We're coming back to a whole zone on euro dollar where we'd seen the buyers only too happy to step in, buy the euro, sell the dollar, and push the market back up. So I think the moment we're trading around about 109, we've got levels coming in. We've got lows from February this year at 108.25, then from January 107.80-ish, and then just ahead of 107 from the end of last year. So for me, despite the fact that we'd expect dollar strength if the election goes the way the polls are, I just question how much strength there really is, and of course how much strength there really is to come. And of course a well-known market cliche is to buy the rumor and sell the news. And you could say that maybe one of the contributing factors to the dollar strength we've seen in recent weeks, it's slightly different against the pound, but one of the contributing factors is the fact that maybe the market is expecting Clinton to win. So if Clinton does come in, it's hardly going to be a surprise, I don't think, based on what the polls say at the moment, leaving the politics to one side, just looking at it from a market's point of view. So maybe that could be the catalyst for any dollar bulls to take their profits, and we may well see the likes of euro dollar reversing. But I think for the sort of the casual investor or the medium-term trader, euro dollar is a really interesting one to watch over the next few weeks, because we're coming back to what had been for this year, really important levels for this currency pair. And I think if they're going to bounce, if it's going to bounce from anywhere, then we're surely getting pretty close to the area where it could bounce from. And if it does bounce and does start to recover, there's maybe 500, 600, 700 points on the upside from here. I wouldn't be in a hurry to buy it just yet. Let's flip it over to the shorter term charts and look at it from a trading point of view. So now these are hourly candles we're looking at, so we can see the size of the decline over the last few weeks or so. And is it today we've seen the euro slip to a new low for the move. So just today it made a new low for that downtrend. So I'd be in no hurry to buy just yet, because clearly the market is still bearish on the euro. Saying that, we have seen something of a strong turnaround in the last couple of hours, or the last 3 or 4 hours, I should say. We've seen the market rally around about 50 points. But I think it's maybe an interesting one to keep an eye on in the days ahead, see if we can maybe build on the strength today, but just be wary that that trend is still down. But I think based on the daily charts, we're getting near to what have been pretty important levels for euro dollar. So I would just question whoever gets in to be US president, how much dollar strength is really left. It's a slightly different picture, of course, with our own currency, with the pound against the dollar, because that is something of a crazy market, for want of a better word, at the moment. This is the move today. Let me just, is that a 10-minute chart? Let's make it a really short-term chart. We saw the pound again today absolutely fall off a cliff. So it was trading today about 1 o'clock, about 122.30, and it dipped very briefly below 121 to the dollar about 3 o'clock this afternoon. So we saw a good 130, 140 point sell-off this afternoon. I still think, we look at this every week on the lunchtime Wednesday webinar. There's a slightly longer term view. That's of course the move on Brexit night, EU referendum night. It's a market where you have to be, I think, still really wary of any rallies in the pound. There seems to be plenty of people only too happy to sell into any strength. So I think it's a market. Our own currency, the pound against the dollar, is one that remains very vulnerable. And I think it's only if we start to break properly through, maybe 123.50, you could get mildly bullish for the short term. But I think it's just important to be wary when a market has been as weak as the pound has. That was that flash crash, of course, from a couple of weeks ago, the strange moves we saw then. But you can see how much of a ceiling 123.50 has been. I think if we can clear that, there could well be quite a few stop loss orders sitting above 123.50, and that might kick off something of a more extended rally. But I would just be very nervous about trying to pick the bottom in pound against the dollar at the moment. I must admit, when we had that move on EU referendum night, I thought that was it. I thought that's the lows. We've seen the lows, but clearly that's proved to be wrong. And we've taken out that was the move there. The low is around about 129, 132, but now we're a lot lower again. So I think there's a fair bit of rebuilding the pound needs to do to try and get back to maybe slightly more recent levels against the US dollar. But let's see what happens. So on election night again, so I think you'd expect Clinton gets in, dollar goes up, Trump gets in, dollar goes down. But I think considering the run we've seen in the dollar lately, I'd just be a bit wary. And I think we could well see maybe some of that dollar strength reverse. The last thing we're going to look at, and we'll look at a couple of things here, but we'll look at gold. We'll also look at oil as well. But gold's always an interesting one, of course, because in times of trouble, one place that investors are happy to park their cash is gold. So it's traditionally seen as something of a hedge against inflation. But of course, when markets are going crazy, gold tends to go the other way and tends to go up. So once again, I think if we saw Mrs. Clinton get in, as the polls are suggesting, you'd think that means, well, investors are much happier to take on risk, and they'd expect the price of gold to slide. So they'd switch out of what are seen as safer assets and look to embrace risk via the stock market, for example. Now, if Mr. Trump gets in, now that, again, I would think this is probably the surest move. I think of all the markets we've looked at, if Donald Trump ended up winning the election, you would expect gold to have something of a rocket put underneath it, because you'd expect investors to shy away from risk and push the price of gold up. So it's an interesting one, but again, I think there are a couple of caveats with this, because let's just flip over and take a look at the price of gold. So if we go back to the charts, I've got too many screens, so here we go. Gold's been an interesting one over the last year or so. So what we're going to look at is gold priced in dollars, which is the traditional market way of pricing it. Let's just, if you just take ourselves back in time a little bit, we had the run from the early 2000s on gold. So we're going back to 2001 when gold was about $250, $270 an ounce, and famously, of course, Gordon Brown sold some of our gold back then. A fact that often gets dragged up, but we saw the start of this fantastic run in the price of gold. A cracking trend, absolutely brilliant trend in the price of gold. But it stalled, and it stalled ahead of sort of the $1,900 an ounce mark back in sort of June 2011. And since then, the story for gold has been one of steady decline. It's trading currently at 1275. It has been as low as 1100. It's lost a whole chunk in the last few years. But I think the moves we've seen in recent years, or over the last 12 months, over the last maybe slightly more than 12 months, the moves we've seen since sort of where we were 1450 in July 2013. If I just plonk like a trend line on here, I do think that the strength towards the end of last year and how that has followed through to this year, is a suggestion that at least this leg of the downtrend for gold is over. And if I flip this over to the daily charts, we'll see sort of how it's looked over recent months. There we go. So we did see it fall off a cliff in the last few weeks. The 1300 level had been doing a great job in propping up the price of gold, and whenever it drifted down to 1300, we see the buyers come back in. So it's lost that trend a bit. For those of you who've looked at charts, that's been the trend line from end of December up until just a couple of weeks ago. And the 1300 mark had done a good job of propping it up. So even though it's broken that, yes, it's lost some momentum. But again, it's something I've been banging on about in the weekly webinars that I do. We still haven't really taken out sort of previous significant lows. So for me, even though it's run out of steam, a fair bit in recent weeks, we've still got 1250 left as something of a level. Then we've got much bigger levels back here from Feb, just as it was sort of clawing its way up and making its way through the 1200 mark. So we've got sort of 1190 to 1250. So for me, I think regardless of who gets in the White House, I think that the bias for gold is arguably still up. I think if Donald Trump got in, I think that would do more to accelerate the trend in gold. But tying it up as well with that view on the dollar, we've seen a good run in the dollar in recent weeks. Maybe it's time for the dollar to turn around. If the dollar goes down, gold goes up. You think about gold, US dollar, it's almost like a forex pair on its own. So we'd expect, I think, while gold, I think for the short-term traders out there, if you really wanted to trade gold, we've seen it. I mean, it's pushing, just tonight actually, it's pushing back to its best levels for a couple of weeks tonight. So it's up at 1275 at the moment. For me, if over the next couple of weeks it drifted back towards 1250, it still looks like a buying opportunity. And for the short-term traders, a stop under this low, whatever that is, sort of 1245 from September. But I think for me, from a medium to longer term point of view, it does look like gold has broken the back of the most recent downtrends. So I still think the bias for gold, unless it slips back below this 1190 mark, the bias for gold is still up. So we'll start wrapping things up there. But I think in summary, there are plenty of markets to watch, and I think that maybe the market that's being the most nervous at the moment is the US stock market. We're really seeing it since it fell off a cliff in September, just marking time, and we're trading now, where we were 3 months ago, back in July. But I think there are some big levels to watch, and I think there will be just a sigh of relief once the election is out of the way, and we'll see US stock market. The bias is clearly still up. If we went back to, I think there was a bit of chatter the other week about it breaking the trend that had been in place off the Feb lows. Was that what I saw people talking about? So we have sort of lost that a little bit. But for me, while the 2100 level holds, the bias is still up for the stock market and the S&P 500, but it's just marking time at the moment. So for me, that's clearly one to watch. Euro dollar, and I think the risk here is maybe for the dollar is that the dollar's had enough of a run anyway. Whoever gets in, and we could well see people booking dollar profits when the election is finally out of the way. And gold, even though you'd expect gold to do better if we have an uncertain result or an unexpected result where Mr. Trump gets in, I think the bias for gold is still up. So either way, I think it's going to be an interesting November once this is out of the way. But we've maybe got a couple of boring weeks that we need to get through while markets mark time ahead of polling day in the US. So I'm going to start wrapping things up. I hope you've enjoyed this short view this evening about maybe what to keep an eye on over the next few weeks. Like I say, I regularly run these free webinars with Aondo. So tomorrow's one, 12:30, is a more shorter term look at a mix of different markets, looking at where the opportunities may be over the days and the weeks ahead. So you can register for that on the website. I do this social trading webinar 7:30 on a Tuesday, a couple of times a week. I've been working with Aondo on social trading for a few months now. My background is traditionally, in sort of doing your own trading, but to find out a bit more about that, if you go to my website, tradeafter.com, I've written some stuff on there about that. But for now, we'll start wrapping things up a couple of minutes ahead of time. We'll see the US stock markets still look pretty boring this evening. We'll see how things react when those Apple numbers come out after the closing bell after 9 o'clock UK time. But for now, we'll stop things there. Thanks for coming along tonight. Hope you found it useful and enjoy the rest of your evening.